So we want to look at SAU USD in 3 hours to see what SAU has done after market open on a gap by Monday. Price have gone on to close that gap and attempting to create a new high, which it succeeded by breaking the previous high and successfully retested the roof. We can see the previous high here, which was a head roof. It has sustained price for a very long time, and when price came to that level, it respected it, broke the structure due to fundamental analysis, and retested, and it's making its way up. However, we have an opportunity for sell after this heavy breakout from the supply roof. As a supply roof, I posted this yesterday by 3 a.m. 3 a.m. I posted this trade, and exactly what I said was what price did. So this is a supply roof. So we look out for other potential opportunity based on the strategy, back tested, trusted, and let's see. So I'm interested in this price action. A new high drop, a new high drop, a new high drop, a new high drop. So let's see. Let's say you in a potential drop based on structure. Is a roof. First touch, second touch, and on technical, we are going to look for more confluence as to why price might not exceed this level. I want two or three more confluence so that we can be guaranteed that price will return back to retest 2,756, where you can begin to look for a potential buy opportunity based on strategy. And we want to gauge this. Let's see what other price action lies on that structure. Why we gauge trend angle is to see what that angle has done in the past. I call it gauge. You gauge it to see what that angle has done in the past. What price action did it provide? What exactly did it do? Did it provide an accurate support to become resistance structure? We want to see that. I like this resistance structure, resistance structure, break of resistance structure, retest, retest, retest. But the structure got messed here, and price breaker from the structure. Price retested resistance roof, broke out of the structure, and not really too nice, but a little nice. So what we see here is price still on the buy. Hopefully, the change strategy by Sydney Open. By Sydney Open, you will see a heavy drop, whether you like it or not. It is based on strategy. We are looking for confluence. Why is confluence important? Confluence is important and critical when it comes to analyzing gold. Gold is very volatile and precious. So That's why we focus on the highest volatility stuff in the financial markets. You trade good and you come out alive, you're strong. Some for the weak. So we are looking for opportunity. The price will return from 2,774 into 2,756.69. I have a roof which I will call ROS, and ROS also a supply roof, and ROS and also a supply roof, also an ROS. We have a demand floor. So let's keep this for now. SR is an SR break of an SR structure, retest RT. Retest RT 2, retest 3, body of a candle retest, break of a resistance structure, which is a supply roof. That was a previous supply roof ascending trend line. We're going to call it ATL. That's an ascending trend line. When we have three touches, we can make our trend. If we have three touches, we can align it, then gauge the angle. You can see here, trend angle. We gauge the trend angle and see what that angle has done in the past. So the market is closing in the hands of bulls, but I know it will drop as the market is pricing in Trump's presidency. So it's actually pushing the price of gold and silver, and possibly we will check out copper chart as well. So this is what we have. Then breakout of the resistance structure, price returns on retest. That's also an RT. Is also an RT. Then another retest again. So let's put it down. Then break of a support structure, price came back on retest. So that retest must be noted. Now on technical, price is back. So we can tolerate two touches now that price is moving from demand floor to supply roof. So on technical, we have two supply roof against the upswing. On technical, we have two supply roof against the gold. That is double confluence, two ascending trend lines saying the same thing, saying that here is a sell. I'm not the one making this up. I'm not the one making it up. That is the structure of the market. The structure of the market is, yes, the market is printing, but it's going to drop. Sydney Open, it will drop and go back and break the structure. So it's going to drop, peak liquidity, then destroy the roof. It will drop 2,774.72 will drop, whether you like it or not. Go check our previous post. When I say whether you like it or not, it's whether you like it or not, it will happen because of the structure of the market. So we have another complex ascending trend line, 8 year, where price has played similar role. Then the next thing we need to look at is which other confluence do we have? Now the thing here is like if price breaks this structure and return above the purple line, it will switch from supply roof, that is pending price by close of New York session, into Sydney open, price will switch from supply to demand. Such a shift reignites buy potential, especially for a top tier asset. So let's keep our cards open for a buy. On this foot, we have strong economic data coming in, and what we want to see here is if it is possible for correction to return into this floor and to go back and break it and expose us to 2,800. And to gauge that exposure, we are going to clone a perfect price action to see what it has done in the past. It has to be perfect. If it's not perfect, it is useless. If you don't see a clean price action, forget about it. Based on experience, most dated price actions end up in pain. So it has to be clean. If it's not clean, forget it. So you see we have here two resistance structure. Resistance structure 1, resistance structure 2. Stopping price on two occasions. I expect a break of this ascending red trend line, which is a supply roof, for price to challenge 2,800, where you have first resistance, second resistance, and this is a break of structure. If we arrange this very well, we can get the joke on 3 hours. Support structure, which I will call SR, then we have another support structure, SR, now break of a support structure, price returns on resistance, ROS, and I will call this RT, not just ROS. ROS means resistance becomes support on break of structure. So we have retest 1, we have retest 2, we have retest 3, we have retest 4, and I'm expecting retest 5 in the zone of 2,800. It will happen based on strategy. It is based on strategy, back tested on multiple times. The result is the same. So it might even extend into 805 Wednesday, and a tap into 2,805 will return price into 2,782. An instant 200 pip drop where buying potential will be weighed based on fundamental analysis and other economic data. As interest rate cut continues to loom, investors are risk averse, so they will be weighing their risk, and gold has found liquidity. The Chinese jewelry industry, massive in gold acquisition, data shows that they are not slowing down in the purchase of the nuggets. So this is what we have for SAU, just to keep it simple. And we do like to share light on the breakout of a 3-hour resistance structure that brought the retest in the zone of 2,746, 47, 48 that gave birth to the current all-time high. We like to look at the structure based on the price action. So you can see a breakout of the structure from the roof, and the price came on retest and have done what it is used to all the time. You can see here a resistance structure, a top layer roof, the close of the market Friday and open on Monday with a gap and a drop into the zone of 2,725, which on our lower time frame we found that price action from another break and retest structure. We have here support structure, break of a support structure. We have here support structure, break of a support structure, retest 1, retest 2, and price have left. So let's not make things complex. Support structure, break of a support structure, retest, break of a resistance structure, retest. Price came down to pick liquidity from the floor. You turn on your line chart on 1 hour, you will see an ascending trend line with two touches. The two touches are capable of giving you a clean ascending trend line, which becomes a demand floor, uptick. And when price return, price move from 2018 into 2774, promising to tap into 2800 based on structure. So let's get this out to avoid the messy charts. So our mind is on retest to 2756, where you look for potential buy opportunity. Yes, that is the only thing we have here. One, two, three, four. Four charts, four lines on a chart. That's pretty okay. We try to minimize the number of lines to avoid, confusing the brain. The fewer the lines, the more the brain understand. You know, we don't need to make things complex. So this is what we have for. We have we have double confluence, two ascending trend line, playing on supply roof. This is on supply roof. When price is trading below the line, is on supply. Above the line is on demand. So on a broader perspective, we have when we look at this, we see we have fulfilled the roof. And look at it here. Resistance structure 1, resistance 2, 3, 4. Price switch from supply to demand. Demand 1, demand 2, bye bye. Break of a demand structure. Price came on retest and returns again on retest. So our faith is challenged on this second retest after the breakout from a support structure. So what is the probability that the structure will be broken for price to return on demand and create a new all-time high? So if price breaks this resistance structure, which is a supply roof, is a foundation for uptick, promising to tap into 2,800. It is based on structure. So this is what might likely happen. And the best we can get in terms of looking for correction from the bullish rally is to see price return to the roof of the previous high. The roof of a previous high was 2,756 into 58. It becomes a foundation for uptick as a broken supply roof becomes a demand floor. So this is previously a supply roof. A break of a supply roof becomes a demand floor where we wait officially for a buy. So put your buy order, put your buy order, support, that's the support floor. So when price breaks supply roof, on return it becomes a support floor, or you can call it a demand floor. Let's call it demand. We are getting used to that word. and it's making a whole lot of sense because it lets you understand what is going on in the market without indicating